The new year and a new all-time high for the stock market. Wealth strategist and tax attorney Rebecca Walser is here to guide us on emotional investing.
Yes.
Emotional investing. Well, first off, welcome back.
Thank you.
So, yeah, emotional investing.
Yeah, this is such a easy but yet complicated issue to explain, because what happens is we are taught, and this is one piece of conventional wisdom that I believe 100%.
Okay.
Buy low, sell high. You know, we're taught to buy low and sell high. So right now, when we are reaching the top highs, NASDAQ, Dow, of course, S&P 500, Russell 2000, everything's reaching all-time highs. People emotionally feel like they're missing out. Maybe they sat on the sidelines, they got really burned after the Great Recession, so they didn't jump back into the market. They've been sitting on the sidelines, and now they're seeing these highest highs, and they're like, oh man, I am missing out. And so they have the desire to buy in, but they buy in now, they're buying in at the top of the market has ever seen. And what that means, Natalie, is that they are taking a chance that the market will continue to go up so that they will actually, you know, participate in the growth and gains.
And so clearly we're talking about hindering that emotional investing. So you're saying just because you're feeling that, you feel like you're missing out, not the best plan?
Oh my gosh, I don't want to confuse anybody at home, but I will tell you, this is an unprecedented situation. I would tell you this time last year that we are overdue for a correction. Equities are definitely overheated when you look at where they're priced at versus their 10-year cyclically adjusted price earnings ratio. So there's no doubt, if you look at some statistical analysis, that equities are very, very overheated according to our average over a long period of time. But I have to say, now that we've had the tax reform passed, and now that we are getting all of these companies that are coming out and saying, we're going to give bonuses, we're going to invest in property, plant, and equipment, we're going to hire more people, we're going to, you know, on and on and on, because the corporate tax rate went from 35 to 21%. So this money is coming back over, and they're going to use it to really grow the economy. So now we have this really unique situation where we normally would definitely expect a correction and a pullback, as we are calling it. The tax reform might actually prevent that from happening.
Really? I would say normally you're always skeptical. And I think of you when I see, you know, always these new highs that every day you hear at the end of the local news. You always hear that. And I always get a little scared, like, oh gosh, we're getting high. What's that mean? But you're saying, wait, maybe I can breathe a little easier? Maybe? I know it's that crystal ball that we just don't have, do we, Rebecca?
I would say under normal circumstances, I would expect a very large correction. We have been overdue for a substantial correction for quite some time. You know, Jim Rogers is a prolific investor like a Warren Buffett, and he came out last June and September and said he expects the greatest correction of his lifetime to happen. So I agree with his sentiments. However, now that this tax reform has passed, and now that this money is coming back over, and now that we have all these corporations saying they're going to invest in America, that is going to create an economic, positive economic growth. And with positive economic growth, you don't normally have a big market correction. So it's a really unique situation. Never happened before in the history of our country. We've had one repatriation once before. But the reason it's different this time is because when the money came back over last time, they had still a high corporate tax rate. So companies brought it back, bought back their stock, and did not invest in our economy. Now we have a permanently lower 21% tax rate. So companies are saying, yeah, we're going to bring it back, and we're going to invest because we now have a much lower tax code.
Wow. So unprecedented times.
Unprecedented. Very hard to predict. One clear thing is, do not have all of your eggs in the stock market basket. Never. Never, ever, ever. Always have asset diversification outside of the market. Real estate and other types of things that are not definitely tied to 100% the stock market.
Good stuff. Again, thank you for shedding light on this. We always appreciate your time. And if you're interested in getting more information, well, you can reach out to Rebecca and her team at 866-929-3258 or visit them online at walserwealth.com.